What's up, YouTube? In this video, we're going to go over PayPal, ticker symbol PYPL. Currently, this company is trading almost at all-time lows. 52-week lows is $55.53. Currently trading about less than $2 away from that. Short interest on the company only at 1.7%. You'd kind of think short interest would be a little higher with how much the stock's been beaten down. Earnings aren't announced for about another 2 weeks, so we'll probably release another video, an updated video with updated financials and expectations of the company sometime after earnings get released on the company. But we're going to head over here to the financials on PayPal. Revenue, gross profit, net income, all three of you right here. You can see your revenue, gross profit, net income there. And the only thing not trending higher is gross profit. Otherwise, net profit or net income and revenue both trending higher. And we can see our net income, how this is overall trending. Looks like if you draw a line here, it looks like it's just maintaining, getting back on track of where it should be on its trajectory higher. Gross margins are shrinking, but net margins are not. They're relatively stable at about 14 to 15% range there. Overall, year-over-year growth change on revenue and gross profit starting to shrivel up a little bit. Hopefully, maybe this can start turning around and get back up to about 10% growth rate on revenue and gross profit. Return on invested capital, pretty decent, about 12%. I'd like to see it a little bit higher, but not too bad. Cash, short-term debt, company currently sits at about $10 billion in cash and $41.7 billion in debt, short-term debt. Cash to total liabilities, again, cash 10 billion, total liabilities 55 billion in total liabilities. Net income to free cash flow. We have more net income to free cash flow, which is very good, but our net income is 4 billion. They're bringing 3.4 of it down to the free cash flow, so pretty good there. And our free cash flow kind of starting to roll over a little bit. Maybe it's just a blip, where it's pulling back and then maybe it continues higher. We'll have to wait and see on that. Share count, they are buying back ever so slightly on the shares, but they are not diluting us, so that is good as shareholders. Capital expenditures, just maintaining around 750 to 700 million, 660 currently. So it's maintaining a consistent CapEx rate now. Comps, we have 4 other companies to compare to. So on PayPal here, we have 0 red flags, which is pretty unusual to see, but that's pretty cool to see. That's good to know. So we come down here and compare all these companies to one another, and we got our market cap revenue here on this chart. We have PayPal, the leader in the market share in market cap. And we have FI as, and actually the leader, sorry. FI is the leader, PayPal second. Overall in revenue though, PayPal does a tremendously large amount of revenue compared to everybody else. Revenue, gross profit, and income. Even though FI has the most amount of market cap, PayPal almost has as much gross profit as FI does revenue. So, kind of tells you how strong PayPal is compared to some of these other companies here. Growth rate on PayPal, most important one, you're sitting at EPS 41, revenue at about 11%. The rest of the field is about equal to that, a little bit less than where PayPal is sitting. Gross margin, PayPal, not the best gross margin across the board, but right about middle to top tier. Operating margin though, PayPal doing pretty good. Looks like the competition looks like about 15 to 20% is where operating margin is going to sit based on these companies for an average range. Profit margin 14%. The rest of these companies can't, well, FI is not too far behind, but profit margin about same thing, about 14% range. Free cash flow, again, FI is doing pretty decent over here on free cash flow, almost equal to where PayPal is overall. Pretty good. Return on invested capital, PayPal doing pretty good there. Price to earnings, PayPal only sitting at 16, FI 29, GPN at 40. So in terms of PE, PayPal definitely seems to be very undervalued based on its peers, especially with how good of a market cap and margins are almost the best across the board. Overall, PayPal is pretty solid in in comparables here against everybody else. Now let's figure out what PayPal is worth today. So currently PayPal, they're telling on pure lunch valuation $200 per share. However, we have a forward EPS growth rate of 56%. So I think it's only correct to maybe drop this down to, let's say, 20% for a growth rate, which then puts us at pre-lunch fair value of $55.12. Multiples comparison, we have two companies here that are not profitable, so we'll have to eliminate those. That gives us a price per share on PayPal of $120.58. Our manual PE in the company is very, wouldn't say very, but is definitely a little bit overvalued. We have market cap minus cash plus debt divided by cash from operations gives us 26 for a PE there. Price to book, 5-year average 7.72, currently at 3.24, so about half of where the average price to book is. PEG ratio telling us that this is fairly valued on forward looking, almost undervalued. So PEG ratio is telling us that company is a pretty good deal right now. Grams valuation here, we've got $120.58 per share. Discounted cash flow. Analysts have a growth rate of 8%. Their average growth rate is 22%. So I'm going to match what analysts have of 8% here. That gives them a DCF price per share of $78.20. Down here at Rule 72, we have three different growth rate sources on our EPS for an average growth rate of 13.48. That goes into 72, 5.34 times. That goes into 10 years, 1.87 times. So almost get to double this 2 times. So that would probably give us more of a number. I would give us 14 there for our future EPS, which gives us a fair value of $94.36. Summary for PayPal. We have currently trading $57.28 per share. Fair market value today, $93.77. 30% margin safety, $65.64. Analyst price target, $85.10. So we have valued PayPal before. We got a price tag or fair value of $118.03 on the company. We can kind of compare what we did before we have our PEG ratio, which is 1.67 currently. Manual PEG we didn't include there. 15.8 for evaluation, currently at 26.4. Price to book, 8.5, currently at 3.23. Benjamin Graham, $72, $120 today. Discounted cash flow, $230. There must be changes in the percentage of growth over time here. As analysts change their expectations of the company, it'll change our valuations as well. Our multiples valuation, pretty close to flat. Rule 72, also pretty close to flat. Peter Lynch valuation, also pretty close to flat. So really, our big change here across on the company was our DCF. When we did it last time, maybe worth looking at the video and figuring out what we used for a percentage growth rate on free cash flow. It could have been, if their history is 22% and analysts had 8%, there's a chance I could have used like 15%. And even then, that wouldn't quite get us there. So the other thing that did change on this table, though, was we did not include our trailing 12 months. We could have been using the $5.1 billion free cash flow, which is what could have skewed our DCF price per share as well. So there was a few changes between then and now on our valuations that we did. So overall, here's where we're sitting, $93.77, previously $118 per share. Either way, still telling us we are very undervalued on the company. We can see very easily how the financials are looking at the company, and they're trending higher. Very good growth on the company. You're right. I mean, this is the most important chart, I think, is you just see this thing is just trending in upward direction. I mean, you can't argue with it. These are the numbers, and the numbers are telling us that things are trending in the right direction right now. I mean, we'll see in about 14 days to see how the most recent numbers are, but I don't think there's anything to complain about so far. So we do have obviously this thing's in a very tight wedge pointing lower, right? And currently sitting at the bottom of the wedge, setting up for earnings in about 2 weeks here, which could, if it just chops around down here for the next 2 weeks, which actually will only be 2 more candles here, then maybe that's a move back higher. I really don't see a move lower. I can't imagine how much lower this stock can go. Obviously, it can go down to zero, but based on earnings and based on the financials, I really think PayPal has a good shot of shooting back up to at least $76 per share. That'd be its next resistance point. And then after that, if it can break through $76, I think it's got a chance of getting up to about $104 per share. And also, after earnings come out, you can redo the calculator and figure out, okay, what's the most updated financials and throw those in the calculator. Figure out maybe PayPal is going to be worth a little bit more than where it's at right now. But right now, it is currently sitting at $93.75 per share. And analyst price target is not too far from where we're at $85.10. But that'll do it for PayPal. If you found value in this video, drop a like, subscribe, comment, and we'll be back later with another stock analysis video.